I noted that the S&P broke through 5,300 towards the end of the week last week. The big question, of course, is do you expect this bull run to continue?
Yes, actually, from Equity, we're very bullish when it comes to equities because we think that it is sustainable for the bull run to continue, whether it's earnings seasons. Even Q1 earnings season surpassed analyst expectations. Yes, 61% missed out on revenue. We can see that revenue is lagging. However, I think the big theme is that companies are still getting strong. Revenues are lagging because they are cost-cutting when it comes to employees, which is something very normal to see.
Yeah. What about NVIDIA? That's the big one this week that people are watching out for. How much of the direction of travel from here onwards is going to be determined by what NVIDIA come out with this week?
I don't think we should underestimate any of the companies that are AI or semiconductor. These are like the sectors that we're actually focusing on when it comes to stocks and equities. Big part of it is tech, even in China tech. So I think with all eyes on NVIDIA, I think if earnings and the forward guidance surpass expectations, then definitely you're going to see another boost in the stock market.
Yeah, I just wonder if it doesn't meet expectations, then what happens? Because there seems to be a lot of optimism already baked into some of these valuations.
That's true, but NVIDIA is not the only barometer for the equity market's bull run. There's a lot of other supporting factors. I think it should play a big role, but I think the bull run will continue either way.
Okay. What about, well, we spoke about the micro. What about the macro? And again, coming back to what's priced in or not priced into the Fed rate curve. I checked this morning, there's about 40 basis points of rate cuts priced in. Obviously, people were quick to price in more once that CPI number came in slightly softer than expectations. But again, to what extent is the direction of travel also underpinned by markets' expectations for rate cuts this year?
I think definitely the number one theme is rate cuts. I think it's actually overshadowing earnings season. Rate cuts, it's producing so much optimism in the market for a September cut. And I think after Powell's last speech, we saw that there was so much optimism that the rally even continued even further. And I think we have still room to continue with this rally further, especially that with the whole backlog of narratives of the cuts happening starting September, and also other central banks starting with cuts. So I think this narrative is really going to support the equity market, and we're still going to continue with it.
What do you think the biggest risk is to equity markets here?
I think persistent inflation. I think that production costs and wages are going to still negatively affect inflation levels. I think we might see stagflation, not a guarantee and not necessarily, but if we do see, then this will weigh on the economic growth even further. We've already seen slowing economic growth, but I think with stagflation, then we might see some problems arise further.
I thought it was interesting. I saw that you are a gold bull.
Yes.
And gold has reached an all-time high. So obviously your thesis is playing out. Do you expect that to continue as well? And why has gold been doing so well?
Yes, we continue to be bullish on gold. We actually revised our expectations from 2,600 to 2,800 by the end of the year.
Which is where we are right now.
Yes, exactly. We are around 2,400. So yes, gold has already powered through 20% from the start of the year, and I think it should continue. The normal playouts haven't really been the factors serving gold as a safe haven, but Japan retail demand and China as well, central bank for gold reserves are really powering through gold as a safe haven, and as well it has become everyone's favorite.